Okay, in this video, I am going to try in a short period of time, if possible, to go over my kind of entire approach to trading and why, and just some of the key foundations and why, if you just follow price action in the way I'll describe, it really puts the odds in your favor to be able to come out ahead on any stock. And I wanted to just see if I could wrap it all up in one video relatively quickly, give you the main foundation points, and then, from that point on, in the future, I think you'll have a better understanding if I point out a given stock on any day, or if you actually want to look at a stock or something like that, how this all comes together. It's pretty simple, but there's a few steps to it. So I want to see if I can get it all in one video. Anyway, I'm going to go Abbott Labs as my example, just because you kind of know the stock and we've been talking about it. And this happens to be a daily chart at the moment. The green bars show a higher close than the day before, red bars a lower close. And then this is a 15-minute chart, which I'll show you the key to this chart and why there are actually 26 15-minute bars each trading session. And I'll show you the key principles there and how it all comes together. And again, like today, I know I pointed out that the stocks gapped up, Apple and Nvidia and Netflix, and then they headed lower, and why I was anticipating them to turn up, which they all did. You might say, well, why did that happen? And I'll show you why. Because at the beginning of a session, only a couple of things could happen given the whole context of the way you've analyzed it coming into the section. So let me start with that coming into the session on the daily chart. And the basic principle here, is that when you're going to buy a stock, obviously you want to buy it and then sell it higher. That's a given. But the question is, what's happening on this daily chart with the green and red bars that give you the high probability that it's going to move higher? Well, the key is that you want to identify when the sellers are patient, and that's like any given product. Sellers want to sell at the highest price possible. So bottom line is, when you see a green bar, for example, there are two scenarios, but the first one, the main one, is when you see a green bar, don't think of that as like the buyers are buying. They're anxious, and that's the condition we want to be in. But really what's happening when you see a green bar from one day to the next is that the sellers in this point were being very patient. They're waiting for the higher price. And if they're waiting for the higher price, odds are they're continuing to wait for the higher price until they give you a sign that at the moment they've reached a good price, to sell. But when they're being patient, there's not too many of them. That's what I'm trying to point out. The patience of the sellers is the key, and a green bar kind of shows you that from day to day. And I'll go through in a second, all the green bars and show you what happens the next day. But then here's the second principle, is that I want to look at the midpoint of a prior bar and see if we move higher or lower from there. And again, in the buy condition, you generally want to be above the midpoint of the prior day's bar and then heading up. So basically, if we keep those two principles in mind, let's just go through the Abbott chart. I think you could see here, on this big up move a few weeks ago, just look at this, starting from this big green bar. You can see here, this is a midpoint higher. This bar is midpoint above that higher. This bar is midpoint higher, but then we closed red. This bar was not the midpoint and higher. It actually went below the low of it and above the high of it. It closed green, but it wasn't a complete midpoint higher all session long. This one, midpoint higher. This one was an overlapping bar, so let's call that nothing. This one, midpoint higher, midpoint higher, midpoint higher, midpoint higher. This is it might have started midpoint higher, but it ended up overlapping. This one's midpoint lower. This one's, if any, overlapping a little lower. This one's overlapping. This one's midpoint lower, even though it's green. And I could show you how this is support. And it could have been a buy early in the session, which I'll get to in a minute, but I don't even want to necessarily. There's really two types of things early in the session, either midpoint higher, looking for buys, or there could be some lower move to a prior day's low, and depending how it gets there early in the session, you might want to do a bounce trade. It's not the good trades are midpoint higher, midpoint. So it's that simple. And I just wanted to point that out to start. And again, the key being that the midpoint higher, on the green bars, that shows continuation, and it shows the buyers are really anxious and the sellers are patient. When you get a midpoint higher after a red bar, like here's a red bar, and then this day we started midpoint higher, that's showing that after the sellers at that point are ready to be patient again, and the buyers are ready to be anxious again. And that's the key to really what's going on there. But anyway, that's step one. Step two is on this 15-minute chart. And again, this is each day. There are 26 15-minute bars in each session. And the key principle I want to point out here is that the high and low of each day typically happens very early in the session. Whatever the high or low of that day is going to be typically happens very early. And when you combine that with this concept of green and red bars and midpoint, or support levels, let's say the low of each bar, then you have a high probability approach that's in place. So just to prove, so to speak, let's just go way back anywhere in here. You could see that here's a day, let's start at the beginning of the chart, where here's the open and it proved to be the low of the day. Here's a day where it opened lower and just went sideways all day, but the low was right near the open. Here's a day where we went down for one bar, started up all day, so the low of the day was near the open. Here's a day where we opened up gapped up higher, went down, came up, and closed a little lower, and the high of the day was at the very first bar. Here's a day, the next day, where we opened, went down. Let's just move this slider ahead. And went down for 2 bars and then went up all session long. So the low of the day was near the open. So again, the high or the low of the day is always near, not always, but it's almost always near the open. You don't have, and the philosophy there, it gets into detail, but generally there's a theme for the day that's happening. And you don't necessarily get it going way up and then going way down and way up and way down. That's not the way stocks typically work day to day. And then finally, this could be for another video down the road. Most of the time, you don't get a trending day where it kind of opens near the low and goes up all day long straight like that. Typically what it is it makes one push. It forms its high or low early in the session, makes some push high, let's say lower or higher, and then it makes maybe one more push to test that, whatever that high was early in the session. And that's the way a typical day works. So you want to keep that in mind as you follow price action and follow a trade. Here's a rare day where it kind of goes up all day long, makes one push down, and then closes near the high. But here's a typical day where you kind of open, consolidate, the low of the day is formed early, makes one push up, and then all day long you just go sideways, and at the very end you test that. So that push up to the high was really all you got all day long. So keep that in mind for maybe later for trade management. But here's a day again, open near the low of the day, pushed up after 4 bars, and then the whole day long it just kind of went sideways. It made one push up to test that high, but that was it. So really the whole day was in these first 4 bars. So keep that in mind in terms of how a day actually works. Now in terms of just the simplified way to look at trading and setting up high probability opportunities, given that you're looking for something on this 15-minute chart and you're kind of monitoring each day, what happened the day before, and are you above or below the midpoint, and also the close of the prior day. But I don't want to get even into that right now. Keep it simple. So let's just look at Abbott. I think you could see here that on these green days it was pretty easy to make money. On these days here back in the middle of April, 14th, 15th, 16th, up, midpoint up, midpoint up, midpoint up. If I go to the 14th, 15th, and 16th back in April, you can see here it opened near the above the midpoint of the prior day higher, paused for a bar, and then started up. There's your buy early. Low of the day was here, went up all day. Here's a day where it opened, kind of pushed down for a bar, but stayed above the midpoint of the prior day. Then you kind of went up for a green bar. That's looking like the buy. Then it just consolidated and for 4 bars. So that's a beautiful consolidation. Buy in here, went up once, came down, and then kind of just didn't, go as high as... The key is it took out the intraday high, which it's supposed to do. Then it went and it didn't really make another push up. It still could have made money. This day was a example where it opened up, came down, opened up, and then it kind of formed a kind of a consolidation here on the first bar. Next bar went up. There's your buy. You're above the midpoint. You're looking at the early 15-minute price action. Got up. There's your money. It went down and made one push up. So again, good money to be made there. So again, I could show you on these days. You could just see how in hindsight, above the midpoint, early price action gave you an opportunity to easily profit. Now look at these. Let's just go through some of these days because this is looks like it's tricky trading. Now I like Abbott. It went up to 100. Now you expect it. I don't want to get into context right now of why it kind of just had a 1, 2, 3 little pullback and now starting higher. But that's a whole nother topic. Let's just look simply at the day by day, and it looks like tricky in here because not many of these days were midpoint and higher, easy winning days like this. But let's show you how you kind of protected pretty well. And the 1 or 2 days where it did try to move up, you traded, but then you weren't hurt hardly at all. And then on these last 2 days, 2 of the last 3, it was very good trading. So just going here, let's go quickly somewhere in here on the 22nd. This little bar, it's a green day, and okay, so this day fine. Well, yeah, I guess I could start anywhere, but let's just start here on this 22nd. You see this buy, green day from the prior day, and then it opens up above the midpoint. It comes and consolidates for 2 bars, and that's a good type of setup. It didn't immediately go up to buy after the first 15-minute bar, but after 2 of them, there's your buy, and it did go higher, okay? And then eventually it came down, and it paused, and then came down. So let's say this was a very small loss. I mean, this could have been 96.70 to, once you saw this, 96 to like 50 cents if you really didn't want to hang in there. I could show you why you probably would have broken even given what you're expecting, but it doesn't really matter. It's a very small loss because it really started above the midpoint and higher right here, but didn't really follow through because you wanted to take this. Once it takes out this overnight intraday high, that's what you're expecting to do. You kind of break even at that point because that's your target. Once you get that, then you really just get very conservative, but I don't want to get into trade management now. Anyway, the next day, just go day by day. You can see here, after that day, we open midpoint and go lower. Big red bar, and that's right on this day here, the 24th. Let me just make sure I have it right. Oops, I missed it. Okay, I was doing the 26th. Let me go to the 27th. Yeah, I didn't show you the right bar, but anyway, let's kind of start from here again. Damn, I wanted this to be a little clearer. The 24th. Okay, so this bar is a green bar, and let's start on the next day here on the 27th, where what it does was now it had this little green bar in here from yesterday, and it opened up above the midpoint high, but immediately came down. And this is like a trade like I showed you today with those other stocks where when you comes down, stays above the close and above the midpoint, you look for that reversal to head up, and it was right in here. And there was a little, Abbott is not necessarily the most volatile stock, but it did offer an opportunity for a couple hours to make money, and it never really got, the target would have been this intraday high, never got there, but you shouldn't have lost. It tried at the very end, but again, easy to make small gains, and you just didn't see the price action you needed to get to those highs. Then the next day here, big red bar down, opens below the midpoint, heads lower, nothing to do. Here's a day where I could see here it ran midpoint lower, so it's not one of those early aggressive buys, but the question is, did it hit support here and give some early price action where the low of the day was early? Let's see what it looks like. Yeah, I mean, what happened was it opened down here and came up and then paused, and then the next bar then went higher. So once it takes out that intraday high, I can then use a first pullback and do a little scalp trade. That's all I would do on a stock like this, because down here on this big red bar, you're not expecting it to make a new high. You're just kind of expecting it to eat maybe halfway up into that bar, or if it's a smaller red bar, maybe closer to the highs, but that's about it. So it's not an exciting trade, but price action early in the session showed you the low of the day would be here, and if you wanted to, you could have scalped. Anyway, next day, looks like the type of day where midpoint higher, but then it closed lower. So let's see. You start here on this 15-minute bar, pause, which is beautiful. You're holding above the midpoint and everything else above yesterday's close. And this is a buy signal up here. So again, it went up, and there was an opportunity. It took out this high, and there was an opportunity to break even at worst, or once it came down here and you can get out right where you entered and virtually no risk, which to me is not a problem. If you could just have every trade no risk, you're not going to win them all, but there's plenty of great trades. So anyway, Abbott is still consolidating in this area, and it closed lower. This day, midpoint lower. You can see nothing happened. I want to wrap this up here. This is a big red day. This day here, midpoint lower, and it really didn't. But you can see it almost had a small little bar. So now I'm thinking, all right, now I've had this red pullback. I'm excited about the long term. Could this be the green, midpoint higher day? And it was 2 days ago. And boom, beautiful. Opened up green, green above the midpoint, above the high, above everything. Then just consolidated for 2 bars. So there's your buy as it starts higher, and it went up all day. Great trade, beautiful trade. Then this next day, you're expecting it to hold the midpoint and go higher. So what happens is it comes down, opening bar, no problem at all. And then it pauses in here and starts up. So I'm buying it right in here. And I'm really expecting, not only this intraday high to be taken out, after this green bar, I really thought that, you should get a higher high. That's typically what happens with these green bars. You at least take out the high and hopefully trend a lot higher. But anyway, this one, 4 hours just went straight up, and then you couldn't get it, and then eventually break even. It just didn't give it to you. That was a big red bar. So back to square one. But what happens today? Look at that. We open above the midpoint. 2 bars just kind of pausing here, and there's your buy signal for Abbott today. You just had to take it, given that the early price action, midpoint higher on the red bar, and it went up all day long. You followed price action, big winner. So you can see here, even in this tricky environment, maybe a very small loss, couple of break evens, and then 2 big winners. And obviously, if you have this condition, you're going to make a lot of winners. So just wanted to, let me wrap it up here. That's the video that really, it's just that simple, I guess, in terms of green bars, midpoint higher, or red bars, that reverse with a midpoint higher. Maybe sometimes you can buy at support at the low of a prior day's bar. And I'll get into more situations where it's consolidation, where you're really just getting those like a days in a row, overlapping. On those days, you're just looking to buy at the bottom on any kind of an opening 15-minute pattern, or buy an aggressive breakout that hopefully you get, kind of like on this day where it just, today was the aggressive breakout day at the end, where you kind of start higher and move up. But anyway, that's on consolidation periods, which I can get into. But if you can just keep that in mind with every daily chart, and then that the opening 15-minute chart kind of sets the tone for, and there's really 2 types of opening 15-minute trades. Either it just goes up and pauses, or it goes up for 2 bars and you buy the first pullback. It goes up, it pauses, you buy that. Or maybe it starts a little lower, staying above the midpoint and close, and then starts higher. Those are the type of buys you look for early. It's that simple. Then you follow price action, during the day, given the fact that most days aren't trend days, and you look to take profits accordingly. Do this over and over again, find the best stocks, and I'm just telling you, it's a very low risk, safe way to trade. And hopefully that made sense, makes things a little clearer what I look for, and it's pretty simple stuff. So that's it, and I will stop this video now.